Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about UNITEDHEALTH Group INC quarterly report. UnitedHealth Group Incorporated offers a wide range of businesses and services through its four segments: United Healthcare, Optum Health, Optum Insight, and Optum Rx. The company provides health benefit plans and services to various groups, including national employers, public sector employers, small businesses, individuals, and state programs caring for the economically disadvantaged. It also offers healthcare coverage, health and well-being services, Medicaid plans, children's health insurance, and health care programs for specific populations. In addition, UnitedHealth Group Incorporated provides care delivery, care management, wellness, and consumer engagement services to patients, consumers, providers, employers, payers, and public sector entities. Its Optum Insight segment offers software, information products, advisory consulting arrangements, and managed services outsourcing contracts to various organizations. The company's Optum Rx segment provides pharmacy care services, including retail network contracting, home delivery, specialty pharmacy services, infusion and purchasing, and clinical capabilities. It also develops programs in areas such as step therapy, formulary management, drug adherence, and disease and drug therapy management. Overall, UnitedHealth Group Incorporated offers a comprehensive range of businesses and services that cater to various aspects of the healthcare industry. The significant drop in UnitedHealth Group Inc. stock price, a year of challenges. UnitedHealth Group Inc. UNH has experienced a significant decline in its stock price, plummeting by over 35.7% in the past year. Several key events and ongoing concerns have contributed to this decline. The primary cause of this drop is the persistent issue of higher-than-expected medical costs and Medicare Advantage claims. The company's struggles with rising medical costs began early in 2025, when it missed earnings and revenue expectations and significantly lowered its full-year outlook. This trend continued throughout the year, with a substantial overrun in medical costs in the second quarter, leading to a further lowering of the earnings outlook. The cyberattack impact, leadership changes, regulatory scrutiny, and investigations have also played a significant role in the stock's decline. The cumulative effect of these events has led to a substantial drop in UnitedHealth Group Inc.'s stock price over the past year. As the company continues to navigate these challenges, investors will be closely watching its ability to manage medical costs and adapt to changing regulatory environments. The primary drivers of revenue growth or decline can be summarized into several key factors. Revenue growth is primarily driven by the increase in premiums earned, service revenue, and growth in specific business segments, such as UnitedHealthcare's Medicare, Advantage, and Optum's revenues. Additionally, pricing trends have contributed to revenue growth. On the other hand, revenue decline is largely attributed to a highly competitive commercial risk market, decreased membership due to regulatory impacts and changes in product categories for employer benefits, pressured Medicare Advantage funding, increased medical costs impacting pricing and benefit design, and insufficient Medicaid funding, leading to margin pressure. Net income and profit margins decline due to unforeseen medical costs. UnitedHealth Group's net income experienced a significant decline in Q3 2025, with a decrease of $3.2 billion compared to the previous year. This downturn was also reflected in the company's year-to-date YTD performance, where net income margin decreased from 6.2% in 2024 to 2.1% in Q3 2025. The main contributor to this decline was the higher-than-expected medical cost trends incurred by the company. This unexpected increase had a substantial impact on profit margins, leading to a decrease in net earnings margin attributable to UnitedHealth Group shareholders by 9%. While there was an initial improvement in YTD 2025 with a net income margin of 3.7%, it eventually decreased again due to ongoing medical cost pressures. The decline in other comprehensive income also played a role in the company's financial performance. Overall, the unforeseen rise in medical costs has had a profound impact on UnitedHealth Group's net income and profit margins, resulting in a significant decrease in its financial performance. The company is generating positive operating cash flow, with a net cash provided by operating activities of $23.419 million for the 9 months ended September 30, 2025. Although there was a decrease from $21.835 billion in 2024 to $18.589 billion in 2025, the company still maintains a significant and positive operating cash flow. The company's debt level and interest expenses have undergone significant changes in recent years. Notably, the total debt securities available for sale increased from $4,223 to $46,919, a substantial rise of $42,696. Additionally, the total debt securities increased by $46.8 billion from 2024 to 2025. In terms of interest expenses, there was a decrease in interest expense for both the 3 and 9 months ended September 30, 2025, with reductions of $71 million and $125 million respectively. However, interest expense per annum actually increased by 2% to $544 million. Management is projecting continued growth in healthcare spending driven by inflation, medical technology, and demographic trends. To mitigate this, the company will focus on controlling costs through various efforts. Despite potential challenges such as decreased membership due to benefit design changes and regulatory impacts, management aims to balance growth and profitability across all dimensions. The company expects downward pressure on Medicaid margin percentages, but plans to offset Medicare funding pressures through cost management, network adjustments, and premium increases. Growth in revenues is driven by Medicare Advantage and Medicaid growth, Optum Rx, and pricing trends. Management will continue to mitigate medical cost increases through engagement with healthcare providers and consumers. In terms of financial strategy, the company plans to increase dividends paid by subsidiaries to parent companies in 2026 and maintain a quarterly cash dividend at an annual rate of $8.84 per share. The company's financial summary reveals that it has engaged in 2 key shareholder return initiatives. Firstly, the company has paid dividends to its shareholders, as indicated on multiple pages of the report. Secondly, the company has also bought back shares from the market, further demonstrating its commitment to returning value to its investors. That concludes the financial summary for UNITEDHEALTH Group INC. Feel free to comment below, and I will be happy to answer them when possible.